Hey there, this is Sean, and welcome back to Not Financial Advice. I'm going to ask you to hit that like button and subscribe. Today, we're going to jump right into a really interesting stock together, but I thought that I would start off with a quick daily update on my portfolio. So today, I'm down $650, essentially down a little bit over 1% to the market's 0.62 decline. A lot of underperformance from the Russell 2000 small cap index today, down 2.3%. And if we take a look at how companies are doing today, if today as a day was captured as the snapshot for a year, what you would be thinking is that we were in some sort of full blown recession. So in my portfolio, the stock trading highest is AutoZone. So a little bit of context, we're about halfway through the trading day here on Wednesday, January 3rd, 2024. And we have AutoZone up 1.6%, Berkshire Hathaway up 1%. We have Seneca Foods that makes generic canned fruits and vegetables up 0.8%. um, Johnson and Johnson, a dividend king, Kroger, the largest grocery store. These defensive companies all up significantly, two, three, four, five times more than the market. And so the context with the market's movement today is one of the Fed chairpersons said that interest rate hikes are not off the table, and we're waiting for minutes from the Federal Reserve coming up here in about an hour and a half, which may move the market. So looks like people are trying to buy, but the market is still down. And that gets us back to today's stock we're going to be reviewing, which was a subscriber request for Square. Or Block, formerly known as Square. And so we're going to dive into that and learn a lot about this stock together right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. By the time you read about it in the Wall Street Journal, it's already too late.
And if we take a look at Square's metrics here on Qualtrim, we can see that this is a large cap company to the tune of about $45 billion. We can see a forward PE of 28.3, which, spoiler alert, is pretty dang high. But then again, you did see the thumbnail and title for this video. So looking at some more metrics here, high level, Square has a free cash flow yield of nearly 2%, which would be great, except for the problems with stock-based compensation, which we're going to be going into at a moderate level of detail. But yeah, it's there are some problems here. And so negative profit margins, that's an impressive feat. Additionally, we can see cash and debt is one of the few things that they have going for them. It looks okay, but let's just dive right in here, start looking at Square's fundamentals. And we're going to learn a lot today, not only about this company, but also crypto. We're going to learn about unprofitable tech, and we're going to be comparing Square to a couple other companies that I think are a little bit better. And so if this is the type of content that you enjoy viewing here on YouTube, I'm going to ask you to smash that like button, make sure that you're subscribed to my channel, and then turn on bell notifications so you can be notified the next time that I post. Additionally, if there are any stocks you'd like for me to take a look at for you, drop that ticker symbol in the comments below. Make sure that you have that bell on, and I'll notify you as soon as I get that up. So jumping right into it, what we can see here with Square is the first metric of the day, which will be a check mark, revenue going up and to the right. Over the last 4 or 5 years, rather, revenue is up 39.7%. And so this, in fact, is a check mark. And we saw a huge jump from 2020 to 2021 and 2022. And I believe I have an understanding of what's responsible for this. So I'll touch on that here as we move forward. Now, we're going to be hitting a rough patch here when we're taking a look at free cash flow. So we're looking at an annual basis on free cash flow, and here's what we can see. So, this isn't the worst looking chart in the world. Obviously, there's something going on here, but we can see some cash flow growing up and to the right. But is it? And so this is why I felt the need, to bring this video to you in a very thoughtful way, warning signs that there are problems with the company and that it is not a good place to be. And so let's dive into that together. Over here on Qualtrim, we have a fantastic tool which is called free cash flow and stock-based compensation. And so we can see the free cash flow as it sits now. Let's go ahead and turn this view on. And so this is what disgusted me. Stock-based compensation basically is where the company will either, to my understanding, take shares outstanding or issue new shares and then pay executives within the company with shares of the company stock for free. Which, if you own the company a year ago and they give out a bunch of free stock today, you now own a lower percent of the company. That's called stock-based compensation, and it's diluting shareholders. If they're not outright losing money, there's pretty much not a year where they're not issuing more stock-based comp than they're actually producing in free cash flow. It's gross. So let's look at stock-based adjusted free cash flow. And so what we can see here is over the last 5 years, because they're just being ridiculous. Over the last 5 years, they don't have any free cash flow to speak of. I can't average this number and do a valuation based on free cash flow for Square because it's a significantly negative number. Big red X. This is what you don't want to see. Moving forward, let's see what else we can see here. Earnings per share can be manipulated. And despite what I'm sure are at times creative accounting practices, um, they essentially have next to zero free earnings per share over the last 5 years. So I can't value it based on that either. So certainly not saying the company is worthless. In fact, any value that it holds, I'll be pointing out here in a second. But as far as earnings per share, that's a red X mark. Cash is going up and debt is going up. Um, Based on their lack of profitability and a metric I'm about to discuss with you right now. If I saw better things, this might be okay to me, but I'm gonna make this an X. And we'll go into the next thing that makes that cash and debt position an X. So now we're looking at return on capital employed. And so this means when Square sells stock or issues bonds, how can they take that capital and get returns on that capital once it's employed? And so essentially, they have 0% return on capital employed over the last 5 years, plus 3 or 4% some year, down 2 or 3% other years. This is a big red X mark. They're having huge problems with profitability. So let's take a look at what else we need to see. We're going to look at shares outstanding. They're massively diluting shareholders. This is probably where some of that stock-based comp is going for. Uh, Nice cushy perks for the executives, but not for the shareholder. Red X. And we'll also take a look at profit margin. There is none. Red X. Lastly, we're going to stop by here and take a look at expenses going up and to the right. Largest part of that being sales and marketing. So they really are having to push these products that they have. That's S&M, $2 billion in this 2024 period, $2 billion of sales and marketing expenses. So this is a red X. It's going up and to the right in orders of magnitude. Okay, so not looking great. $69 stock. I suppose we're gonna swing through here and take a look at some stuff. $69 stock. We have insiders selling, 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 selling. Gentleman did purchase at 51. It's now at, I think, 69, I just said. Yeah. So gentleman purchased at 51. It's now at 69, but many more sales than buys. The same gentleman made large, high conviction buys again around $51. Other than that, we have sales, sales, selling, 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 selling. So, and this isn't the same person and over. Executives are just dumping shares of this company left and right. Usually that doesn't mean anything. And that board member who bought at 51 only bought it because he thought it would go up, which he has done. And maybe he's cashed out and hasn't been reported yet. I don't know. Insiders can sell for a lot of reasons, but they know all of these things that I'm exposing to you. So usually sales don't mean anything, but when we're looking at such an upside down company, um, I would take that into consideration. So for what that's worth, I'm going to have you like the video and subscribe to the channel. And we're going to go back over here to Google Finance, and we're just going to take a look at this chart. So the company is down. Company's down about 75% from its all-time highs. Let's utilize the tools that they give us here on Google and see some different key events. So stock jumps 5% as analysts say the fall is over. If you had bought then and held till today, you would be down about 10 or 15%. Here we see Square is on the verge of fresh all-time highs. Reason this analyst says block stock as a buy. That appears to have been wrong up to that point. That's what analysts know. Now here we have shares of Jack Dorsey's block tumbling after a short seller alleges fraud. Down 15% that day. And then more recently, block shares surge 11% on smaller than expected losses. How exciting. So, all right, let's move forward. So we're taking a look here, doing a quick read through together on a free article from the Motley Fool, which isn't the best financial website, but it has some information I wanted to highlight to you guys. Like the video, subscribe to the channel. So we talked about that stock-based compensation deal with Square Stock, and I think that's the biggest single issue on this company. But Block gets religion on stock-based comp, and that's great news for shareholders. Maybe. So this fintech management team is letting investors know it's gotten the message. The years of pandemic fueled digitalization and rock bottom interest rates drove tech and fin stocks upward without much regard for traditional valuation metrics. Those rising stock prices made it easier for tech companies to compensate their employees with highly priced stock. And for a time, growth-oriented investors seemed to ignore stock-based compensation as a real cost. Many tech companies that were not profitable reported adjusted earnings numbers, which conveniently left out stock-based comp. That turned GAAP losses into non-GAAP profits. So Block was certainly a victim of the tech slump in 2022. Shares were down nearly 75% from their all-time highs as of this time in this article being written. Yet a year and a half after the stock began that decline, Block's management appears to have gotten religion when it comes to controlling spending, especially stock-based comp, and that's great news for shareholders, allegedly. So this came out in the beginning part of 23. It's now a full year later. So let me come back over here. So they told everyone they were going to knock it off when it came to stock-based compensation, like 2 or 3 quarters ago. Let's see if that's true. Okay. 1 quarter. But it looks like they got their druthers in the quarter after they made those comments. And now they've been well behaved for 1 quarter. Not good enough. Not good enough for me, necessarily. Let's keep on looking. So And then they have this interesting thing called a rule of 40. Apparently, it's a big deal, and it's what venture capitalists say. And basically, what it means is Block or Square is suggesting that they're going to follow the rule of 40, which is understanding that younger software companies often have to accept losses as their en route to reaching scale. This isn't necessarily a new company, folks. So while maturing software companies don't grow as fast, they should turn profits. That premise is that a great software company will have a combined revenue growth rate, okay, and profit margin of 40. So a company growing its top line at 45% with a profit margin of negative 5% would qualify, as would a company growing its revenue at 10%, achieving a 30% margin, qualify for a rule of 40. That's a crap metric. It's like 5 times worse than earnings per share. It sucks. Hate it. However, as Warren Buffett said on this topic in 2015 to shareholders, it has become common for managers to tell their owners, you and I, to ignore certain expense items that are all too real. Stock-based compensation is the most egregious example. The very name says it all. Compensation. If compensation isn't an expense, what is it? And if real and recurring expenses don't belong in the calculation of earnings, where in the world do they belong? I think that's enough for that here with this. So like the video, subscribe to the channel, bells on. Let's move over here to a free article on Seeking Alpha. So this is where there's a little glimmer of hope, possibly a silver lining, but not in a company that at this point I have any faith or trust in. So Square, get your Bitcoin exposure from this stock. Square is one of many stocks that lets investors get exposure to Bitcoin. This company holds Bitcoin on its balance sheet and also processes crypto transactions through Cash App. So Square owns Cash App, whereas in my last video, PayPal owned Venmo. I'm going to be linking relevant videos at the end screen. Square is more resilient than other Bitcoin stocks because it doesn't depend on cryptocurrency exclusively to make money. This was written a couple years ago. That doesn't seem to be true anymore, if it was at the time. So they're just talking about how much Square has gone up and how awesome that is. It was just like Shopify, blah, blah, blah. And so Square, blah, 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 blah. Here we go. Here we go. Let's see. Okay, here we go. So there was a quarter a couple of years ago where investors looked towards Square's earnings positively. Square's quarter at that time showed substantial growth, and despite the revenue miss, was profitable by every usual metric. A big part of that was because the company brought in so much Bitcoin revenue. Even with Bitcoin sliding at that time, it resulted in an impairment charge, but it still made up for more than half of the total revenue in that quarter. Bitcoin, half of the total revenue a few years back in a quarter for Square. And so this company is attached at the hip with crypto, um, with horrible leadership. So Square's relationship with Bitcoin makes it a fairly unique company. On one hand, it is much more invested in Bitcoin and crypto than other fintech giants like Stripe. On the other hand, it's not a crypto pure play like, say, Coinbase, which I'll link in the end screen, along with my PayPal video, which would almost certainly see revenue decline in the event of a prolonged crypto bear market. Coin stock would. That's true, I think. So I know. I believe I know. So in this article, blah, 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 he talks about how Square's great because it has Bitcoin. So here's some competitors to Square, and you guys should all know what it is. If you've gone to a little independent, coffee shop, they have the iPad with a little square thing that you can tap or swipe your card in. That's what Square is. And so they're a fintech company, which means financial technology, competing with Shopify, who has an online store, which apparently this company does as well. PayPal is another fintech with a Cash App like or the Venmo like product in Cash App. And then again, you have PayPal, who's another fintech company in direct competition with Square. Between the two of them, Cash App and Venmo, very similar businesses. And then Clover is a private company that has sort of point of sale systems for mom and pop shops. So, long story short, Square has Bitcoin exposure by people buying and selling crypto on Cash App, as well as holding Bitcoin's holdings within Square's balance sheet. Because this article is a few years old, it paints the picture, but the numbers are going to be murky. So, we're going to move forward. So, moving forward to Square's most recent 10Q, what we can see here is that for the 9 months ending in September 30th of 2023, we see something like $16 billion in top line revenue. And what we can see here is transactions. So transactions. So when someone swipes on a Square point of sale system at a hot dog cart or a clothing boutique, there's about a 2 or 3% fee assessed to that proprietor. Additionally, they sell point of sale systems, and so you have to pay a subscription for that. That's this number here, around 10 billion in revenue there. A very small amount in the sale of their hardware, which is probably fine. It's better to sell services and collect toll booth fees and sell hardware. But then their largest segment of revenue was Bitcoin, $7 billion in revenues associated with Bitcoin. And my understanding is they hold something along the lines of, don't quote me on this, but somewhere along the lines of either 50 million or 150 million dollars in Bitcoin. So a sizable amount. And if the price of Bitcoin was to double, that would certainly change the game for this company, especially if they held true to their word about their awareness of how they've been spending money like drunken sailors. Without begrudging or belaboring the point, we'll wind the video down here. I think that Square is a company that can do well in a 2021 um, bull market, or the Santa Claus rally. They probably did all right. They did great in the Santa Claus rally. But all things considered, when I saw the chart for Square, also known as Block, ticker symbol SQ, it looked familiar to me, so I went and compared it to ARK. Over the last 5 years, Cathy Wood's ARK Innovation ETF has returned 18%, 17% with extreme volatility, significantly lagging the market, and Block has done the same, actually worse. So Block is up 4% in the last 5 years. It's a dog, and I hate it. Thanks for stopping by. Like the video, subscribe to my channel, hit that bell notification so we can see each other next time. Until then, thanks for watching.